Hello, this is Professor Marsh, and this is another of our videos in the VITA Volunteer training that we're doing at Newberry College in the January program of January term of 2023. And I am going to look now at lesson plan number 28, which is on payments and miscellaneous refundable credits. So we had a previous lecture on credits that began Unit 3 in our materials, and now we're looking at payments and then also the handling of refundable credits. And what you're going to find in the VITA program is that if you've already entered the information about claiming the credits, then the credits will be calculated and they'll just pop right out on the Form 1040 tax return in the appropriate place. There are refundable and non-refundable credits. Remember that refundable credits can actually create or increase the amount of a refund that the taxpayer receives, but non-refundable credits can only reduce the amount of tax that a taxpayer is owed. So refundable credits tend to be, from a sort of a economic and social theory basis. So they're basically, assistance or welfare payments that are used, and calculated and administered through the tax system. And that's things like the earned income credit, child tax credit, and things of that nature. So in any event, let's take a look at the lesson plan for payments, lesson plan number 28, which is available at the VITA TCE Central website. And what you'll see are the key terms and some of the key terms of refundable credit. There's also a RRTA, the Railroad Retirement Tax Act. We don't get a lot of railroad workers, but if we did, that's a side-by-side Social Security system for people who worked in the railroad business back in the 20th century, so it was a different type of social retirement system, Social Security retirement system for railroad workers. And then tax withheld. Everyone should be familiar with tax withheld. If you receive a W-2, your employer withholds a certain portion of your pay and pays it in, as well as the Social Security tax as tax withholding. You get a credit for the amount of the tax that has been withheld from your pay during the year against the income taxes that you owe in April of the following year. There are other ways that income taxes can be withheld. If you have a client who was a gambler, oftentimes income taxes are withheld from gambling payouts. Also, distributions from pension and annuities. Many taxpayers choose to have a 20% or perhaps some other amount, some other percentage of their pension and annuity distributions withheld for income taxes. And again, we're talking about federal income taxes here. There are also state income taxes that are withheld. Those might give rise to an itemized deduction if you have a taxpayer who's an itemizer and doesn't just take the standard deduction. And there's other types of payments that you might have income tax withheld on as well. Sometimes even interest and dividend income if you have a taxpayer who's not exempt from backup withholding. So on page 2 of the lesson plan, there are a link to the various forms. I'm not going to go through that. You know the drill by this time, but do take a look at those various forms just so that you're familiar with the look of the forms and maybe read some of the entries, particularly the ones that deal with payments. On the Form 1040, payments are listed on page 2. And then there's also on Schedule 3 of the Form 1040, there's a line for additional credits and payments. And so you kind of have to add those together. they all come into page 2 on the Form 1040, where you settle that up with what the taxpayer owes as their calculated income tax from the tables or the charts. And then the difference is the amount of the additional tax due, or for most of our clients in the VITA program, their refund. So in any event, that's that's a good way to kind of visualize how it's going to be presented on the return, and then you can take a look at publication 17 if you have more detailed questions, or publication 4012, and these are at tab H primarily in the publication 4012. Tab H is on other taxes, payments, and refundable credits. So withholding federal income tax, this is where the vast majority of taxpayers make their federal income tax payments. They're withheld from their paycheck on a periodic basis during the year. And you can see the various forms. On Form W-2, the federal income tax is reported in Box 2. And then if it's a interest payment, it could be in Box 4 of the 1099 for interest, if there's some sort of backup withholding on that interest. The IRS has a tax withholding estimator. Some of our clients, some of our taxpayers in the VITA program are going to be disappointed if they don't receive a refund. A lot of people count on that refund on an annual basis, but if they've underwithheld during the year, they might want to adjust their withholding for the future year so that they don't end up in that same situation the next year where they owe something additional as opposed to receiving a refund. And there is a link on page 3 in your lesson plan to the IRS tax withholding estimator. And if you click on that link, it will take you on the internet to an app, a tool, which will allow you to estimate the proper amount of federal income tax withholding so that you don't end up under withheld at the end of the year. And so do feel free to take a look at that. And then let's go back to the lesson plan. And then also on just below that on page 3, there is a tax layer demonstration, just a short video on how to enter payments and estimates. And so when they're saying estimates, they're talking about a different type of estimate. What they're talking about is entering payments and estimated payments. And the tax layer demo recognizes that you can have income tax withheld from your paycheck, the Form W-2. You can also make estimated payments, which are quarterly payments made throughout the year by certain people who don't, like self-employed people who don't have a W-2, and so they don't have tax withholding. And so people who have their own business, a Schedule C business, typically make estimated payments in April, June, September, and either December or January of their estimated taxes for the year. And so that's the entering of those types of payments, as well as any kind of withheld payments against retirement distributions or interest or dividend would go into the appropriate place in tax layer. And the video does a good job of explaining how that works. Then on the continuing down on page 3, you'll see a link to the Form 13614C and where to enter these amounts on page 2, part 5, and how estimated payments throughout the year. You can go ahead and generate the forms in tax layer to create estimated payments for the next year. If you have a taxpayer who finds themselves owing some tax and wants to get into the habit or get into the practice, I guess, of making those quarterly estimated payments, particularly if they're self-employed or perhaps have additional self-employment income that supplements their wages. And you can see that. And there's a YouTube video from the IRS that is linked as well regarding estimated tax payments. And I've seen several of these videos, and this one is a little longer than the others. It's 2.5 minutes, so it's not a substantial time commitment to take a look at it. And I think it does a good basic job of explaining how this all works with respect to estimated payments, and just getting people into a position where they're not struggling to make a tax payment that hadn't anticipated. So that's on page 3. That link to the YouTube video, and then you can see the discussion that you might have clients who file for an extension. So prior to the April filing deadline, they file a form 4868 with the Internal Revenue Service, extending the time to file their individual income tax return to October, 6-month extension. So if filing deadline was April 18th, then it would extend the filing deadline to October 18th. And just discussion that just because you have an extension to file, it does not give you an extension to pay. And so taxpayers who file that extension are expected to estimate and to at least pay in any additional taxes that they expect to be due when they finally file their tax return by April 15th. And if they don't do that, then they'll have penalties and interest due in October or whenever in that time in between, that 6-month period when they file their return, they'll have additional penalties and interest due if they are underpaid. So that's also there, and there's a link to the tax layer video again. So it's worth watching twice. It's a good workout, and then there is a skills warm-up for the class that is discussed on page 4. You can go back to the skills warm-up and get ready to take the certification exam questions on this particular topic. And that's pretty much it. Let me go ahead and go to the skills workout itself, and let's just take a quick look at it for the payments workout, which is in our materials, both for the basic and the advanced track. And this is a very short workout. It's only 12 pages. Again, it starts with the link to publication 4491, and it shows you the 12614C and where those questions are about self-employment income and estimated tax payments. And then you've got the publication 4012. Just keep in mind you want to look at the current publication 4012, not the 2021 one that is linked in this presentation, the skills workout. So then you get the warm-up on withholding. You've got the a couple of case studies, one about Jason, who got a W-2 reporting that he had federal income tax withholding on his W-2 of $2,200, but he also got a 1099 in from a savings bank that showed federal income tax withholding of $35, and so the correct total withholding for his tax return is $2235. Then you've got Amy, who's got a W-2, and this asks you to take a look at her W-2 and determine which amount you'd enter federal income tax withheld. It corrects your answer if you get that wrong. Then there's a true or false question about the estimated taxes and whether it includes taxpayers' income tax and self-employment tax. And you can see that I'll just let you answer it yourself and learn for yourself. It's better. It's always better if even if you answer it wrong, then you learn more. If you just kind of breeze through it, or if somebody tells you the answer, you never really learn it. So in any event, try that for yourself on the skills workout. Then there's a case study about filing for an extension, the out-of-scope situations, and the certification warm-up and practice, and then the link back to the tax lawyer video. So anyhow, good materials on payments and estimates, and then next we will go on to the refund, and then the or amount of additional tax owed, and then completing the return, and then a short discussion on amended and prior year's returns. So keep up with your studies, and we'll talk with you again soon. Have a great day. Bye-bye.